Chubb, CB. Stock surged early Thursday, signaling a move above an official buy point after Warren Buffett's Berkshire Hathaway, BRKB, revealed Wednesday it had built a $6.7 billion position in the insurance giant, according to regulatory filings. Buffett bought around 26 million shares of Chubb worth $6.7 billion, the 13F filing submitted on Wednesday showed. Although Buffett revealed the Chubb position as part of Berkshire Hathaway's first quarter filing, BRKB purchased shares in the Zurich-based property and casualty insurer in earlier quarters. Those purchases were made confidentially, with the identity of the stock kept a mystery until Wednesday's 13F filing. Investors have been speculating about what the mystery stock has been since late last year. Insurance was the first territory into which Buffett expanded Berkshire Hathaway after purchasing the undervalued textile manufacturer in 1962-64. The company acquired the government employees' insurance company in the late 1970s. Geico continues to represent the core of its insurance industry operations, which also include reinsurance giant Gen Re. Insurance operations generated 46% of Berkshire operating earnings during the first quarter. Chubb stock eyes breakout. Chubb stock bolted 5.9% higher to 267.60 during market trade on Thursday, breaking out past an official 260.58 entry from a flat base pattern, according to market surge analysis. On Wednesday, shares angled down a fraction to 252.97. CB has gained 12% in 2024. The move Thursday is a breakaway gap type breakout. A breakaway gap is an unusually strong breakout from a sound base that usually demonstrates powerful demand. With most breakouts, the buy zone goes from the buy point to 5% above it. With breakaway gaps, the goal is usually to buy as close to the opening price as possible, according to IBD analysis. Chubb stock has a 91 composite rating out of a best possible 99. The new Warren Buffett stock also has a 71 relative strength rating and a 97 EPS rating. Berkshire Hathaway has quietly built a $6.7 billion position in New York-listed Chubb, one of the world's biggest insurance companies, highlighting Warren Buffett's continued interest in financial services, according to regulatory filings published on Wednesday. Buffett's conglomerate had been amassing a large minority stake in Chubb since last year, but regulators allowed Berkshire to keep the position confidential. The filing reflected its stake in Chubb as of March 31st, having bought up 6.4% of its outstanding share capital. The insurance group has ridden a wave of rising commercial insurance prices that has sent its market value grow by 3/4 in the past 5 years to more than $100 billion, putting it into a small club of mega-cap insurers that includes Germany's Allianz and China Life. News of the stake sent Chubb's stock up 9% by pre-market trading on Thursday. Berkshire's cash pile has swelled this year as Buffett has trimmed his stakes in stocks such as Apple that have historically buoyed his portfolio. Its cash position hit a record $189 billion in the first quarter. Institutional investment managers in the U.S. that manage more than $100 million must report their holdings in regulatory filings, but they can request confidential treatment to omit certain positions. Berkshire requested that exemption for at least one of its stocks in regulatory filings last year, which have since been amended to include its stake in Chubb. Chubb, which provides products such as home, car, and liability insurance, is headed by Chief Executive Evan Greenberg, who transformed the group when he struck the biggest deal in property and casualty insurance history back in 2015, reversing Zurich-based ACE into New York-listed Chubb. Today, the company employs about 40,000 people across more than 50 countries and territories. Greenberg is the son of U.S. insurance industry veteran Maurice Hank Greenberg, whose decades-long tenure at rival AIG made that group the world's biggest insurer for a time. In recent years, bets on insurance have brought their own set of risks. Natural catastrophes have created huge losses for property insurers, exacerbated by inflation, while Chubb, for instance, is one of the insurers on the hook for the collapse of Baltimore's Key Bridge in March. It is expected to send a $350 million payment to the U.S. state of Maryland within weeks, although the company will ultimately only be responsible for a portion of that payout.